Hello, everyone. Is it finally time to buy or sell Dvlt AI? That's the big question many investors are asking right now, especially after the company's wild trading action and the flood of new headlines. Before we dig in, remember, this content is purely for informational and educational purposes. It should never be taken as financial advice. Always do your own research and consult with a professional before making any investment decision. Now, with that said, let's unpack what's really going on with Dvlt AI, ticker symbol DVLT, a stock that's been catching serious attention on Wall Street and across retail trading forums. Since the 5th of November 2025, analytical systems have been signaling a sell recommendation, giving the stock a technical score of 4.03. That rating alone tells us that the overall momentum and technical setup have turned bearish, and the data supports it. Since that signal was triggered, Dvlt AI's share price has dropped around 15%, translating to an average daily loss of more than 7%. But here's the twist. Even though the recent trend looks negative, the 3-month projection still suggests potential upside swings of over 220%, with some models pointing to possible gains approaching 790%, depending on how market sentiment evolves. So yes, we're dealing with a stock that's not only volatile, but full of speculative potential. On Thursday, November 6th, the company's stock price made major waves, moving 15.87% between its daily high and low. That kind of movement tells us volatility is extremely high, a clear sign that traders are either very nervous or very excited about what's coming next. The stock closed the day down 15%, falling from $1.60 to $1.36, marking the 9th straight day of declines. Over the past 10 trading sessions, DVLT has fallen in 9 of them, an overall drop of roughly 39.5%. Now, one interesting detail is that the trading volume also dropped that day, down by about 14 million shares, leaving a total of roughly 33 million shares traded, worth just over $44 million. Generally, when price and volume both decline together, it can mean that the sell-off pressure might be cooling off. It's not a guaranteed reversal signal, but it's worth noting that sellers may be losing steam. If we zoom out and look at the bigger picture, the 52-week high for Dvlt AI sits at $4.10, while the 52-week low is around 25 cents. Right now, at roughly 1.36, the stock is trading nearly 60% below that previous high, a deep discount that some investors might see as a long-term entry point, but one that still carries a lot of risk. So why is everyone talking about Dvlt AI right now? Well, the company has been making headlines for several strategic announcements. On November 4th, they signed a $10 million worldwide exclusive license agreement with a firm called Skylarks. This deal gives Skylarks access to Dvlt's AI-powered tokenization platform, designed to support a new biotech data exchange focused on genomic, diagnostic, and pharmaceutical information. And that's not all. This latest deal follows a series of partnerships and acquisitions. Just recently, Dvlt AI has been working on monetizing music data using their patented inaudible tone technology. Last month, they also acquired API Media, expanding their reach into the digital content and data monetization space. Adding to the drama, the company publicly disputed a negative short report, accusing critics of spreading misinformation. This move triggered heated discussions online, especially among retail investors who began speculating about a potential short squeeze. And to top it off, Dvlt AI announced a meme coin distribution event tied to their Dream Bowl promotion scheduled for November 14th. All of this has created a perfect storm: partnerships, controversy, speculation, and hype. In the short term, that combination tends to create intense volatility. Prices can swing wildly as traders react emotionally to both positive and negative news. But the bigger question remains: can Dvlt AI turn these partnerships into real revenue? That will depend largely on the success of the Skylarks exchange, the effective integration of API Media, and whether the company can actually generate consistent income from its tokenization and licensing programs. If they deliver, the upside could be enormous. But if not, the market may continue to punish the stock. When it comes to analyst sentiment, things are mixed but leaning bearish. Analysts currently maintain a sell rating on the stock. They rate the price-to-earnings ratio as a strong sell, mainly because the company isn't showing positive earnings right now. However, they view the price-to-book ratio as a strong buy, implying that the company's underlying assets might be undervalued. Still, overall, the return on investment outlook remains weak, also marked as a strong sell. On the technical side, the story looks even more cautious. The stock is currently flashing sell signals across both short-term and long-term moving averages. Resistance points are forming around 1.84 and 1.97, meaning those are the key levels bulls need to break for the stock to show real strength again. Until then, the trend remains downward. A pivot top sell signal was first triggered back on October 24th, and since then, the share price has fallen over 60%. The stock hasn't yet found a solid bottom, meaning there could still be room for further downside before a reversal. In addition, the MACD, Moving Average Convergence Divergence Indicator, also shows a bearish setup, confirming negative momentum. But on the positive side, trading volume is dropping, which can sometimes indicate that sellers are running out of energy, an early clue that a potential stabilization might not be too far away. When looking at additional trading signals, most of them are still bearish. The MACD shows a sell signal. Short-term and long-term moving averages both indicate sell signals. A few earlier buy signals were noted roughly 26 to 34 days ago, but those have not held up under recent pressure. So, as it stands, the technical outlook remains weak. From a support and risk perspective, the stock currently has visible support around 1.34, a level where buying pressure has previously appeared. If that level holds, a short-term bounce could happen, but if it breaks, things could get rough quickly. The daily trading range has been very wide, nearly 16% between highs and lows, and average volatility over the past week sits above 24%, which classifies this stock as high risk. Let's take a moment to talk fundamentals, starting with the price-to-earnings (PE) ratio. A negative PE ratio means the company isn't currently profitable. And while it's not unusual for high-growth tech firms to operate at a loss during expansion phases, consistent negative earnings over time can raise red flags about financial stability and cash flow. Persistent losses could lead to dilution or even bankruptcy risk if not managed carefully. Investors should also note that the company's next earnings report for the third quarter of 2025 is scheduled for November 12th. That report could be a turning point, either providing reassurance to investors or deepening concerns, depending on how revenue and guidance look. Now, what about day trading and short-term price levels? The first key resistance level sits around $1.53. Traders might consider waiting for a clean break above that before taking new long positions. On the flip side, the support zone remains near 1.34. If the price holds there and starts to climb, that could signal a short-term rebound opportunity. Meanwhile, insider activity tells an interesting story. On September 23rd, insider Bradley Nathaniel T. sold 180,000 shares. However, just a few weeks earlier, on August 28th, the same insider purchased a massive 10 million shares. Another insider, Mbuja Stanley, sold about 33,120 shares in September as well. Across the last 64 insider transactions, insiders collectively bought nearly 25 million shares and sold just over 4 million. That's a surprisingly bullish ratio, around 67% positive insider power. It suggests that, despite the market's pessimism, some people inside the company might see long-term potential that's not yet reflected in the price. Still, when we weigh everything, the volatility, the technical weakness, and the uncertain fundamentals, the overall evaluation for Dvlt AI remains negative in the short term. The stock could continue to struggle in the coming days or weeks unless strong catalysts emerge. For Friday, November 7th, forecasts suggest that Dvlt AI might open slightly higher, potentially around 1.43, up about 6%. But remember, day-to-day predictions can shift quickly in such a volatile stock. The bottom line is this: trading and investing always involves significant risk. Stocks like Dvlt AI can move dramatically in either direction within hours, so never base your decisions solely on online analysis or algorithmic ratings. Always verify information, use proper risk management, and speak to a financial professional before making any trade. So, what do you think? Do you agree with this outlook, or are you seeing a different picture for Dvlt AI? Drop your thoughts in the comments below. And if you found this breakdown useful, make sure to like, share, and subscribe for more market insights. From everyone here, we wish you smart trading, steady profits, and a successful day ahead. This is not financial advice.